Trading dated 31st May 2023. Yesterday, the Bank Nifty closed at around 44,457. We didn't hold up any positions because we were nearing expiry, and we squared off all the profits and booked the losses and profits accordingly. So, today, market opening was around 44,331, which you can see here. uh, Now the plan initially is or was, before like we started taking trades, the idea was to get around like 44,000 500, call 3 units to sell them, and then at 44,000 we sell put, and buy the hedge accordingly at these two levels, at the one level, exactly. So we had this plan in our mind, and we had a backup, like if the first 5 minute candle closes at a lower level or a higher level, we will shift the bias according to the occurrence. This was a basic plan with which we entered the market today. So we see the events and actions which followed. Now the first 15-minute candle closed at a low which is on 44,089. So we relied on the call selling and we got out of the put because the market seemed a little bearish. Now from the 5-minute candles we see a range building up between 44,050 to 61, which is the lowest, and the highest being at 44,333. So a rough edge of 300 to 350 points of range rallied between those two nodes. The only indicator which kept us from shifting the bias completely or heavily bearish were the mid cap, which were holding up. Okay, so next at 11 a.m. the positions that we had looked something like this. We had taken all these trades and subsequently waited for the market to prevail. So now at 11:47 a.m. We see a downfall or a down chain where we see a lot of red candles in the 5-minute window for Bank Nifty. So what we did was we booked the profit for the PE buy, the put buy, and we got out of the 43,700 put sale trade. Okay, so since the market is going down, so instead we sold call options at 44,300 for 2 units, which is a shift from 44,400 call sell, since the market is getting aggressively downward. So we took the strategy for that, and the next strategy in place where that the market, like after these area of red candles, like after these, there was a chance, the probability that the market could trace back, and we will shift our biases accordingly. So now we waited, and then around at 12 noon we see a clear cut bias is bearish, and then we take the following positions. Okay, at 12:30 it was very important, since the low broke, which we were anticipating. The low broke at 43,858, so which was the lowest for the day as of now. So we again bought a P or put option for 1 unit. Here I got an idea from the expert that 43,880 is an important marker which showed indication that the market might retrace, which it did happen somehow. We can see the green candles over here. So here we took an action where we sold 2 units of put at 43,500, and to hedge that at a 1200 point gap we bought same units of put, 2 units. Then the idea behind that, to stop the losses, like get out of the PE sell if this 43,880 barrier breaks out. Okay, get out of the put buy, like if in case the market goes further down. So we waited, and it happened, the low broke. So we shifted now we are relying on the call back again, call selling. So we shifted the call sell to 44,200, and we see the market is stabilizing. So PE sell, like put sell, we are going now for the put sell, which is at 43,500, increased to 1 unit. Like we had a position of at 43,500 for 2 units. Now we increased 1 unit, and to avoid any decay losses, and this the main reason was to avoid any decay loss on the 44,200 call sell. The Okay, so the positions as on then were like these, as you can see. What are the units bought, sold, everything mentioned. Okay, so then we waited for the market to prevail again, and at 2 we squared off most of the trades because they were yielding profit, but only the 44,000 put buy were held in case of subsequent drops. But it didn't happen, as we can see in this chart. It didn't happen. The market traced back, okay, upwards. So we took few of the trades. We sold 4 units of put at 43,500, and subsequently bought 42,500, 500, a 1,000 point hedge. And then at 44,300 we sold call 2 units, and we bought call to keep the bias steady. Like the market was going sideways, so we took the trade so that we can gain profit from both ends. That was the end game. Now further we see this chart, where it's a display of four bank nifty chart under 4 time frames. This is 5 minute, this is 1 minute, this is 15 minute, this is 1 day. Okay, so we see that the market is going up and the indicators were strong, so we shifted the sell to a bit aggressive mode, where we went to 43,700 of put selling, rather than from 43,500. And there were some losses at the 44,000 put buy option, so we booked the losses for that, because there was no point waiting further, as the market was strongly indicating upwards. The bias has pivoted from bearish to bullish, and we followed that accordingly, so that we can make some money. So we waited again. This happened around at 2:30. So we waited again. At 3 p.m. the 44,000 barrier crossed, and it was climbing strongly. So we waited for a little while and booked the profit and square off the market. Uh, and that's it for today as of now. But the main part of the learning was that shift in the bias of the market. Like you need not to predict the chart, rather react to it. And that's pretty much it what we did today. Thank you for your patience. That's the log for today.